revision on trade in and calculation of depreciation. In order for us to remind ourselves of what we've been doing and so on and so on and so forth. For some people, it'll be the first time doing this, and guess what? I got you. So basically, I did get a lot of constructive criticism and I did get a lot of thank yous from you all. I appreciate everything that I'm getting from your side. It means a lot to me, and I'll keep on going in order to make sure that everyone who comes across my videos ensures that they get the distinction they need or they pass with the mark they're looking forward to. So today we're going to be doing a question from this booklet. You know what? You see me, trust me, I'll go all out. I'll look for questions you won't have in order for us to practice more. And yeah. So basically, this is a question on trade in and depreciation. So PPE basically. So we're going to be doing this question, and yeah, let me shift this chair. Yeah, okay, so I think we can start now. So let's read the scenario. I'll attach a picture of the question in the description. Um in the description, and then you'll access it on my drive, and everyone who has the link will have access to it. I don't have to like give you access to view it. If you just press the link, it will open up and you'll see the full picture of the question. So please go download it and have it, and then so in order that you can follow throughout the question and you see where I'm getting the amounts and so on. Those that wanna like take pictures can also tell me, and at school I'll come with this booklet and you'll take pictures. Those that want to make copies as well, you can tell me and I'll make you a copy, or we'll arrange so on and so on. So Polokwane Sand and Concrete Ltd is a company that specializes in selling sand and concrete to households and construction companies. It was established on the 1st of October 2018, and on that day, the company purchased a new vehicle truck. The following information related relates to the financial year end of 30 September 2021. Number one, let's check here first before. We're supposed to do the journal entries for the trade in of the light truck, yeah, for the heavy duty truck. Okay, so light vehicle, the truck was purchased for 700,000 on the date of encryption, meaning the 1st of October 2018, due to an increase in demand in sand and concrete in the new township between Polokwane and nobody called Mamu Mama Shuli. On 31st May 2021, the management decided to trade in the light vehicle for the heavy duty truck at a loss of 70,500. An additional cash payment of 200,000 was paid on the 1st of October 2021 towards the new vehicle. The heavy duty truck was delivered and ready for use on the 1st of June 2021. Okay, so what I learned this past few days is that people prefer different methods. There are ones that prefer the straight method, where I'm just gonna write everything this side and then we're looking for the balance and for the new cost of the vehicle. Some prefer T account. So I'm gonna do both in order for us to tackle things at the same time, but accommodate everyone. So we're obviously gonna have a T account, and we're gonna have asset disposal. So we're going to put our cost on the debit side, right? At 700,000 vehicle, right? So we're gonna have our cost as 700,000, And then we can go ahead and put the loss of 70,500. Your loss goes on your credit side and your profit goes on the debit side. So here's the loss, here's the cost that I put in there. Now they give you the additional payment, which is 200,000. Okay, so now let's move on here. They tell you that the expected useful life of the vehicle is 850,000, right? And then they say the residual value is 50%, 15% of the gross carrying amount. So let's talk about this gross carrying amount. My friend has a problem with this gross carrying amount. Every time I tell her that gross carrying amount is the cost, she just argues. But you need to know that the gross carrying amount is the cost of the vehicle. Remember that. It doesn't mean it's the carrying amount of the vehicle. No, it's the cost of the vehicle. So they're saying the residual value is 15% of the gross carrying amount, right? So we have 700,000. And we're going to multiply by 85 over 100 to get what is the 15%. So basically you could have just said 15 over 100 and then took the 15% and subtracted it from this, but this is the easier way. So you're gonna calculate that, and two zeros, three zeros, multiply by 85 over 100, and you have 595, right? So this amount is the amount that we can calculate depreciation on. So we're looking for accumulated depreciation on the date of sale, right? So let me just make an arrow and say, yes, accumulated depreciation on the date of sale. So what we're going to do is 595000, and they said expected useful life is 850. Then expected useful life is 850 kilometers, right? And then they told you that the accumulated depreciation on the date of sale, you see that they said on the 31st of May 2021, the management decided to trade in the light vehicle for the heavy vehicle, so they sold it on the 31st. So you'll use this 215,000 to get the accumulated depreciation. So you're going to say multiply by 215, and then you're going to have 595 divided by 850 multiplied by 215, and that gives you 150,500, meaning here you're going to have 150,500, right? So since it's a trade in, it means that we're gonna have payables account in the asset disposal, because we're going to pay them for the vehicle. So here we could say payable, but this payable, you don't account for it in the journals. I'm just going to show you. You're going to say payable, but it's the balancing figure of this T account, right? But you don't account for this payable. I'm trying to show you how you're going to get the cost of the new vehicle if you close off the account of asset disposal. So you're gonna have 700,000, and then you're gonna say 700,000 subtract 150,500 minus 10, and you have 479, right? So when they're asking for cost of the new vehicle, you take this payable amount, you see this one, which is 479, and you add your 200,000. What is your 200,000? The amount that you paid additionally, right? So this is your bank amount to get the value of the new vehicle, and you're gonna have 679. 679. Yeah. So for this part, you know that I don't account for this 49000. I just use it in order to get the value of the new vehicle, right? Like how much the new vehicle is worth, basically. So now let's move on to the generalizing part, right? I'm not sure about this line, if it's gonna be like enough, but okay. Anyways, you see the asset disposal. Everything that's on the debit, you put it on the credit. Everything that's on the credit, you put it on the debit. So you're going to debit all these amounts and you're going to credit this. So obviously, accumulated depreciation will be number one. Debit accumulated at one. The statement is statement of financial position. Yeah. And then you're gonna have loss, and you're gonna have 70500. Loss on sale of asset. I'm not gonna write this in full because of space, and yeah, one day I'll have a bigger board and things will be much more easier. And now you have accumulated depreciation, loss of sale of asset, and then because we are buying a new vehicle, we do know that there's supposed to be vehicle at cost, which is the heavy the yeah, heavy track. Mara, I want us to leave it for now in order for you to see that this amount we're gonna get it in the straight line way. You understand? So you're gonna have vehicle at cost, and then you're going to credit your vehicle that you sold, but you credit it at cost as well. So you're gonna have 700,000, right? And then because you paid the bank amount, an additional payment, they did say an additional payment of 200,000, what are you gonna do? You're going to credit it because bank is an asset, and when you're paying, it's credited. Now add these two amounts, and you're gonna get 900. This is something you're going to do on the side. You don't have to show this on your paper. So you're going to have 900,000, and you subtract 70,500, and you subtract 150,500, and you have 679. You see where I got the 679? So both ways, they usually say there's a lot of ways to kill a cat, and this is one of them. You will choose which one works for you. If this T account is much more easier and understandable, you just know that all of these things go on the debit, this one's go on the credit. Or you use this one and you go through all of this and you totalize and you balance the vehicle at cost. Either way, you get the amount, right? So let me touch on the statements for this. You'll have statement of financial position for accumulated depreciation, statement of profit and loss for your loss on sale of asset. You'll have your statement of financial position for your vehicle at cost, and you'll have your statement of financial position for your bank account. So you could say derecognition of a vehicle or recognition of a trade-in as your narration and so forth. Just understanding what you're doing gives you a narration. It's always correct, unless if like you just say yeah, wrong things. But then you could just say recognition of a trade in for a vehicle, right? So let's move on to the second part of the question where they're asking for the depreciation expense. Depreciation expense, right? So I think I should erase this part. No, I don't have to. I could write it here at the bottom. So every time when you have depreciation expense, you are debiting your depreciation and then crediting your accumulated depreciation. Ew. Yeah, space will kill me. And then here it's gonna be obviously statement of profit and loss, and then this one was statement of financial position. The statements don't change. The journal entries don't change. What changes is the amount. Remember, like sit down and tell yourself, okay, when I'm dealing with a trade in, this is what the transaction I have. The only part that changes is that it's either you have profit or loss. Other than that, if you have 1, 2, 3, or 4, 4 marks, and if it's 0.5, 2 marks, you're good to go. So remember that all the time you have depreciation debited and accumulated depreciation credited when you are recognizing the depreciation expense. So now let me close this so we can continue calculating. So let's start first with the one of the old vehicle, right? So we calculated the depreciable amount, which the yes, and you divide it by 850. Now, here's the trick with this question. Now they told you that the accumulated depreciation at the beginning of the year is 170,000, and they gave you on the last day when you sold it how much it was, meaning that the difference of these two is the depreciation expense, right? So you're going to take this, and wording is important in accounting. Understand what you're dealing with. Accumulated depreciation on the date of sale minus the accumulated depreciation at the beginning gives you the depreciation of the year. So you're going to say 215,000 minus 117,000, and you're going to get 45,000. Is it? Yes, 45,000. So now you're gonna have 595 over 850, and you have 31,500. Now this is for the light vehicle, right? Now let's do for the heavy vehicle. So the heavy vehicle, we have the cost of it, which is 679,123, and they told you that the residual value is 10% of the gross carried about. Gross carried about cost of the vehicle. Multiply by 90 over 100, and you have 679,123. Multiply by 90 over 100, and you have 611,123. Right? Then you take the 611,123, multiply by, oh, you have to put the useful life, which is 900,000. There it is. And then you have to multiply it by 35 kilometers, 350 kilometers. And then I just hope I'm pressing the zeros correctly. Like, zeros will give you so much anxiety. No, no, no. It will give you so much anxiety, low key and high key. See what? I did tell you about the zeros. I noticed something looks wrong here. And it's actually two zeros. Yeah, two zeros here. And we have it like that. So we're gonna have 611 with two zeros. 9 with 5 zeros multiplied by, no, I didn't add the 1. Okay, now we have 2, 3, 7, 6, 5. Yes. So now this is your depreciation for the new vehicle, right? So yeah, I got the 35,000 here, and I got the 900,000 here, and the cost, the residual value, I got it here. So we're gonna add these two to get the depreciation amount. So you're gonna have plus the 2,500, and you're gonna have 5,5,2,6,5, 5,5,2,6,5, and then the narration will be recognition of depreciation expense. I do hope that this video assists everyone who needs assistance with revising all of this depreciation, trade in, how to work it out, or who are learning how to work this around. And yeah, I think that's the end of the video. All I have to say is that please do make sure that you rest. I saw the effects of not resting this past weekend. I haven't been uploading any videos. But because I got you, the moment I got strength, I was like, let me shoot a video. So please like, subscribe there, comment in the comment section below on things you would like me to tackle for you, what you don't understand, revision on which chapter, and so forth. Make sure you comment, give constructive criticism, anything. I'm accepting anything. I hope this will assisted you really, like it assisted you. I hope so. And yeah, hoping to see you in the next video, and bye.